Hello guys, welcome to the 3D market commentary for today. Today is Friday, January 7th. Let me just get the disclaimers up. There they are, top left hand side of the screen. Please read them, even if you need to pause the video to do so, please read the disclaimers. Now, my name is Becky. My email address is down here, which is becky@tradictive.com. There's also support@tradictive.com as well. So different email addresses you can go to if you have any questions. Now, the 3D market commentary is a video that we do to expand on, give more context to, an email that we send out every day, Monday to Friday, to our free members. Now, in that email that we send out, we give information and statistics on major world markets, looking at three main elements per market. That's why we call it a 3D approach or a 3D market commentary. So I'll bring that up in just a second. Just before I do, just to show you a different place you can go for questions and resources. This is tradewithufos.com/Becky. From here, you can get different platforms and apps, some of which are free. You can scroll down and book one-on-one coaching if you'd like. And you can scroll down even further and you'll see that you can log in for free and you can ask questions in this general public area, which is great because it means if you ask the questions there, we can answer the questions there and other people can see the questions and the answers and learn from this space, kind of like a frequently asked questions type thing. So ideally, that's where you'd go if you have questions. If not, you can of course email me. So let's bring up that email that I was talking about that goes out to our free members, and of course relevant to market data, which we see here on the right hand side. In fact, I'm just going to load a different one just to give you a little bit more context as I explain them initially. So we call it a 3D approach because we look at three major elements per market. First one we talk about, or first one we look into, is market climate, meaning where do we have probabilities? What's the upcoming market direction? Is it likely to go up? Is it likely to go down? Or is it likely to not really go anywhere? And therefore we have an idea of whether or not we buy, sell, or do nothing. We use an app to help us. It's called AutoClimate. This is a free app on most platforms you can get it on. And what we do with AutoClimate is we use the colours of the dots, ignore the lines, we use the colours of the dots to tell us where the probabilities lie. So if we have a thick blue dot, that tells us probability upwards. If we have a thick red dot, that tells us probability downwards. And if we have a thin dot of either colour, that tells us not enough probability either way. So we will look at that per market, where the probabilities are. We'll then look at buy and sell UFOs. UFO stands for unfilled orders. Essentially, what that means is where are the buyers and where are the sellers specifically? Where are lots of them? And why do we want to know that? Because buyers are likely to push price up. Sellers are likely to push price down. So understanding where they are, which price points they're waiting to buy and sell at, we have an idea of where we should be buying and selling as well. Again, specifically in this case. So for example, we use our AutoUFOs, and for example here, our little green UFOs show us where buyers are. And it tells us on the right hand side between which prices we have this big stack of buyers. Now, in this example, we can see that price came in, hit the buyers, went up. Price came back in, hit the buyers, went up. Meaning, buyers push price up. That's why we want to know where they are. Here we have little red UFOs, and those show us where the sellers are. Again, gives us the prices on the right-hand side. Between these prices is where we find lots of sellers. And again, helpful because as we can see here, price came in, hit the sellers, went down. Came in, hit the sellers, went down, came in, hit the sellers, and went down. That's why we want to know where the sellers are, because they're likely to push price down and we can sell there too. So we'll look at that per market as well. Where are the buyers and sellers that could change price? Then we have market volatility, essentially how quickly we expect the markets to move. So we'll look at each of these elements per market, starting with the S&P 500, which is the top 500 US stocks. Now we are looking at daily charts for each of these, meaning that each candle that we're seeing is worth a day. Different things happen on different time frames, but we are focusing on the daily time frame for what we go through today. So with the S&P 500, we have a confirmed downwards climate. That's a thick red dot, probability downwards. We have sellers up here between 4808.25 to 4747.5 or 0.50. And we can see here that we are closer to the sellers than we are to the buyers. The buyers are here between 4479.75 to 4436.25. Overall, probability downwards to the downside for the S&P 500, top 500 US stocks. In terms of volatility, we can see that we would expect that in 1 year, the S&P 500 would go up or down by 19.55%. So that means in a day, a movement up or down of 57.83 points. In a week, a movement up or down by 123.3 points. And in a month would be 265 points, again, either up or down. So that's the S&P 500. Moving on to the next market is crude oil. As I load it, to point your attention here to different courses and platforms and tools that we use. So the different courses that we do are in futures, stocks, forex, backtesting, trading plans and psychology. Now, most of these courses come with a 3-month complimentary access to the apps. AutoClimate is a free app on most platforms you can use it on. However, AutoUFOs is a paid for app. It's a monthly subscription model. You can subscribe directly to the UFOs. You don't have to get a course in order to use the UFOs. You can just use the UFOs. Depending on which platform you use depends on the cost per month. Most of the time though, it's actually cheaper to get a course and then get the UFOs for free for 3 months than it is to just get the UFOs. But check out what's going to be best for you. Okay, so crude oil. Let's just move price a little bit here, squish it out and see what we've got. So we've got an interesting situation here with crude oil because we have a confirmed upwards climate, a thick blue dot, probability upwards. However, we have gone past what's normal in terms of a move to the upside. We wouldn't usually expect it to have gone up for this long, which means we're starting to lack probabilities that it continues. We also have sellers right here. We are within a big stack of sellers. Those are between 82.33 to 79.3. So we've got buyers and sellers fighting each other. We also have buyers just underneath us at 78.58 to 74.27. My point of all of this is that we kind of have very similar, if not very equal, forces going against each other. Sellers pushing to the downside, buyers pushing to the upside. Whoever wins will win and push price up or down respectively. When you have these two forces around about the same price pushing against each other, it's best to keep out of it because it's a fight at the end of the day. Whoever wins is going to win. To try and guess which one is going to win would be more of a gamble. We want to make sure that we trade when we have clear probabilities in one direction. So for oil, I would say nothing to do there. In terms of volatility, we would expect that oil would move up or down in 1 year by 36.86%. So in a day, 1.86 points up or down. In a week, 4.1 points. And in a month, 8.54 points up or down. So that's crude oil. Okay, next market here is gold. There we go. As I load that, again, just to point down here towards our coaching and support, we offer a bunch of coaching and support for free on different platforms. We also have a closed coaching environment where people pay a small monthly fee to have access to more of our time. Either way, the content is the same. The difference is how much of it you get. So with gold, we have a confirmed downwards climate, a thick red dot, probability downwards. Now, we have buyers down here that if price were to hit these buyers, they might change things. And they are between 1781.3 to 1753. We have sellers up here at 1830.7 to 1808.2. Overall, probability to the downside, but as we start to hit these buyers, we'll start to see some resistance to it. But for the time being, probability down on gold. In terms of volatility, we'd expect gold would move up or down in a year of 15.87%. So in a day, that's 17.89 points. In a week, 39.39 points. and in a month 82 points, again either up or down. So that's gold. The next market is the US dollar. As I load the US dollar, just to make a point to you guys, of course everything that we're looking at here is to do with statistics and probabilities, what's likely to happen, but that doesn't mean what will happen. You never know for sure what's going to happen in life, and especially in the markets. So we manage our risk just in case we're wrong. We might add different strategies or different techniques or tools on top of this to increase our probabilities. But what we're showing you here is, yes, what's more likely to happen, where the probabilities lie. But again, don't take it as guaranteed, because nothing is. So the US dollar, we have an unconfirmed climate. Not enough probabilities either way, a thin dot on our auto climate that's showing us that. We have buyers down here at 55.595 to 54.965. This was the example I showed you before where these buyers have pushed price up already a few times. We have sellers here at 96.67 to 96.33, and these sellers have pushed price down a few times. So overall, we've got nothing to do here on the dollar. It's kind of been going sideways for a long time, not really sure what it's doing. Let it keep doing that, keep out of it, I'd say. With market volatility, we'd expect that the US dollar would go up or down in 1 year by 5.7%. So in a day, that's 0.35 points. In a week, 0.76 points. And in a month, 1.58 points, up or down. And the last market is backed Bitcoin. So there we go. Let me load backed Bitcoin. So with Bitcoin, we have a confirmed downwards climate, thick red dot, probability downwards. Now we have sellers above us there at 47,610 to 45,705. We have buyers quite a way away versus where we are now at 32,820 to 31,615. So overall, probability to the downside with sellers above us and buyers far away. So probability down there for Bitcoin. In terms of volatility, we'd expect Bitcoin would go up or down in 1 year by 71.47%. In a day, that's 1,895.42 points. In a week, 4,172.58 points. And in a month, 8,685.91 points. So that's what we'd expect up or down within those given periods of time. So we have now gone through each of our markets, each of our 5 markets, and for each of them what we've done is we've looked at market climate using AutoClimate, this mainly free app that we use to help us figure out where the probabilities lie. Did we have a thick red dot and therefore probability was down? Did we have, and I'll draw it, a thick blue dot and therefore probability was up? Or did we have a thin dot and therefore probability was in either direction? We've also looked at buy and sell UFOs, looking for these green ones that show us where buyers are and red ones that show us where sellers are. Give us an idea of where we should be buying and selling ourselves. And we've looked at market volatility, which gives us an idea of how quickly we expect these markets to move or how far we expect them to move up or down within given periods of time. Last thing to look at is our weekly economic calendar. We get this from fxstreet.com. We filter by high impact news, and what we do is we are looking for not necessarily whether we think the market's going to go up or down off the back of the news, but what scheduled news reports are likely to come out, that are coming out, are likely to have a high impact on the markets and therefore make them move a bit more, increase volatility. With increased volatility, we have increased risk. We can have increased reward, not necessarily. So as traders, we want to know about what volatility is likely to be. So with that in mind, we would look for today being Friday, January the 7th. And we know that we've already had some news that have come out on European markets and therefore the euro as well. Later on this morning in the US, we have some news coming out, non-farm payrolls in the US. That's often something that will cause movement in the markets. And then we've got some news coming out in Canada as well. Again, unemployment rates and net change in employment. So if you trade those in those countries or you trade those markets or currencies, be aware of that coming out later on this morning, US time. Otherwise, guys, if you have any questions or anything like that, you can come to tradewithufos.com/Becky. You can get apps and platforms here, book coaching, or you can come and ask a question in this free public space so that we can answer it there. Or you can email me, becky@tradictive.com. Always happy to help, always happy to answer questions. I will be doing a stock session later on today, so join me. I think it's 12 p.m. Eastern time, so it's 5 p.m. my time, so yeah, 12 p.m. Eastern time. So I will see you guys later on. Have a great rest of your trading day, and I will see you